All right, everybody. Thank you. So I just wanted to come back, and we're going to go ahead, and I'd like to introduce our next speaker. And at this time, Vince, I'm going to go ahead and take you off of mute. So if you could just please confirm, just do an audio check.
Yeah, I'm here. I can hear you well. Can you hear me?
I sure can.
Excellent.
All right. Thank you. All right, everybody. So the next speaker, next master trainer is Vince Vora. And Vince Vora is a senior trader at TradingWinds.com. And over the last 3 decades, he's been trading and refining his trading systems that are based on technical analysis and price action. And over the last few years, his focus has been on teaching people how to become better traders. And his systems range from simple to sophisticated and can be used in any market conditions to trade Forex, stocks, options, and futures. And so at this time, if you just help me introduce Vince Vora. All right, Vince, I'm going to go ahead and make you presenter, and go ahead and start whenever you'd like.
Great. Thank you, Michael, and welcome, everyone. I'm just going to quickly bring up my presentation here. There we go. Okay. Can everyone see my screen and hear me well? Excellent. Okay. So this will be a very quick but informative presentation on a system that we call 3 Simple Steps to Profit. It was developed over several years, and I'm going to go into much more detail. Okay. Before I get to that, just a little bit about ourselves here at TradingWinds.com. We're a group of professional traders with over 30 years of experience. We're actually real traders and real teachers. We've, over the years, developed our own strategies and trading systems, and we've been teaching people around the globe from beginners to experts. Okay, and today I'm going to teach you a little more than just the 3 Simple Steps to Profit system. I want to give you some basics that you can use regardless of what system or strategy you decide to trade with. I'm going to, start with 6 questions that you should always ask yourself before placing a trade. Okay, these are crucial, and if you want consistency in your performance, you should make a habit of asking yourself these questions before you enter any trade. Okay, I'm also going to reveal the 1 step you can take to eliminate 50% of your risk when trading in volatile markets. As I'm sure any of you have been active recently, you've realized that it's a lot more difficult in high periods of volatility to trade. So I'm going to give you one simple method or one simple step you can take to eliminate most of your risk during these times. Okay. I'm also going to discuss a bit about the hardware and software needed for this system, and then get into the actual strategy itself. I'm going to give you 10 to 12 historical trade examples, and I'm also going to do a live trade review. So if you have a favorite stock that that you like to trade, or any that you'd like for me to assess here live today, make a note of it. When we get to that portion of the presentation, please, I'll ask you to type it into the chat area, and I will bring up my live charting platform and review those with you, okay? And hopefully we will be able to select a trade or two that you can walk away with and actually place tomorrow or the next day, okay? And time permitting, we will also make time for Q&A, okay? Now, before I get into it, there are a couple of questions I'd like to ask you, just so that I know I'm directing my comments to the right people. Now, can you please tell me which market do you trade most? Is it stocks, options, futures, or Forex? If you can please type that into the chat, I'd really appreciate that. Okay, and while you're doing that, I'm going to go ahead and ask you the next question, which is, on average, how many trades do you place per month? Is it 1 to 10, 11 to 20, and so on? I just want to get an idea of whether we have, some very active traders. it looks like we have a number of options traders along with stocks, a few futures and forex, but mostly options and stocks. So that's great. I'll try to provide some examples along the way. Actually, we have some fairly active traders. This is great. Okay, excellent. Thank you for that. Now, just to get the legal stuff out of the way, you know, if you haven't traded for a while, I got to tell you that trading can be risky. Okay, you should never trade with money you cannot afford to lose. Okay, don't risk your mortgage money, your child's tuition funds, etc. It is risky. It's difficult. You know, it takes a long time for you to really hone your skills at this trade and make a living off it if that is your intention. If you've been trading for a while, I'm sure you've experienced that. But you know, you really need to invest in your knowledge. Okay, when it comes to the markets. If you don't, you're going to end up on a roller coaster that looks like this. Okay, and good news is if you've experienced this already, then you're a better trader for it. Okay, there's a saying that, you know, until the market smacks you really hard, you can't become a great trader. And once it does, you gain a lot of respect for the market, and then your trading just naturally improves from there, because the one thing you should really focus on is being risk averse. And with what I'm going to show you today, that will become much easier for you. Okay. Now, if you can relate to this slide, and you know, you've ever sold before the boom or bought just before the crash, you know what I'm talking about. But what I'm going to try to do today is, for anyone who's just starting out, is give you enough information for you to avoid this, so you don't have to have these expensive, painful lessons. You can do this the right way from the beginning. Okay, so let's get into the meat of it, and let's get started with some basics. Now, as I had mentioned, there's 6 questions you should ask yourself before placing any trade. Okay, it doesn't matter whether it's long, short, whether it's an option trade, a stock trade, etc. These relate to any market. Now, the first question is this a clean chart? What you should do, regardless of the system you're using to trade or the strategy, you should always remove all indicators from your chart and look at just the price bars on the chart and figure out whether you can identify the trend quickly or not. And I'm going to show you an example in a minute of a clean chart versus a very messy, choppy chart. Okay, doing this will actually save you a lot of time and money, because you're going to avoid the stocks that are just completely unpredictable. Okay, when you place a trade, you want the odds in your favor. You don't want to be guessing. Okay, and this little exercise will help you with that immensely. The other thing is to ask yourself, is this stock in a confirmed trend? And that you know, the number 1 should answer that for you, but we're going to run through the examples here. Okay, 3, what is my reason for taking this trade? What I'm referring to is you should have a rule-based trading plan in place. Okay, you should always be prepared for what's coming next, and we'll get into a bit more of that as well. How much can I afford to risk on this trade? That is basic money management. I am going to give you the rules that we use at Trading Winds for money management that have served us well for many, many years. And as I'm sure you've heard it before, 5 and 6 are, before you enter the trade, you should know where you plan to take your profit, or at least have decided on a specific exit strategy. Okay, and 6, where will I place my stop loss? Okay, so let's move on. Let me show you an example of a clean chart. Now, can anyone identify the trend here? Okay, it should be very, very quick, very simple. Okay, so here you have, for most of the year, a nice trend up, and more recently, a pullback. Okay, so very clean, very simple, no indicators, nothing at all. Okay, and you should be able to quickly, I see that, versus a messy, choppy chart that looks like this, okay? If you had to guess the next direction of this stock, okay, if you're honest with yourself, you're saying it's pretty much impossible. What it would be is a guess at best, okay? And that's exactly what you want to avoid. You want to put the odds in your favor right from the beginning and be trading a predictable chart versus an unpredictable chart, okay? So you have a clean chart versus a messy chart, okay? Now, that is the beginning of it, okay? But one other thing I want to bring up and point out is that aside from the actual trading plan you have or the system you're using, your temperament, your mood when you sit down to trade should be one of being calm, collected, and just being able to think rationally at that point, okay? So when you sit down to trade, if you are like the characters in this slide here, wound up and all tense, it's not going to go very well for you. It's going to be difficult for you to get that consistent performance, okay? So how can you avoid this? How can you remove the emotions and the nerves, etc.? That is where we get to money management, okay? Money management, if plain and simple, you should not trade with money you can't afford to lose. So the best way to do this is to trade with an amount small enough that it feels insignificant to you, okay? Now, for some people, that may be $5,000 or so. For others, it may be $100,000. It just depends on your own financial state. But regardless of the amount, it should be an amount small enough that it feels insignificant for you. That way, you're not worried about the position. You don't lose sleep over it, and you're calm. And as you see the trade progress, you're able to make those rational decisions and not panic and move your stop or break your rules. Okay. Now, a few rules of thumb that we use for money management. Number one is never risk more than 5% of your account balance in any one trade. Okay. There's a saying out there that says, your whole goal when trading is to trade another day. Meaning, if you take a loss, you want to be able to come back and recover from that. And if you wipe out your account, you won't be able to do that. So the best way to avoid that is to only put or risk a maximum of 5% of your account balance in any one trade. Okay, that way you take a loss or two in a row, and you can quickly come back from that. Okay. Another rule is to never have more than 50% of your account balance actually active at any one time. Okay. The reason for that is there are forces and events that are completely out of our control. Okay, when it comes to trading. The clearest example is a situation like 9/11. Okay, when those attacks happened, it was before the U.S. markets opened. Okay, and the U.S. markets actually didn't open that day, and they remained closed for the remainder of that week. They opened the following Monday at half their value from where they closed. So there was never an opportunity to get out or mitigate your loss in any way. So if you had 100% of your account in there, boom, half of it's gone already. Without anything that you did wrong, you may have followed your plan completely, but regardless of the plan you were trading, you would have taken that big hit. So this way, you would have only been out a quarter of your account and had the funds there to recover. And as we saw from that, 6 months later, after 9/11, the markets were back at the highs they were before the attack. So the opportunity to make it back was there. Now, also, you should never place more than 2 trades per day. If you're trading with daily charts, of course. If you're an intraday day trader, then you're going to be a lot more active than that. But for the purposes of this presentation, I'm strictly using a daily time frame, okay? So the reason why I believe you shouldn't place more than 2 trades a day is, you know, there are days where the overall markets are up strongly or down strong. So let's say you have a day where the Dow is up 300-400 points, the S&P is up 20 points, Nasdaq is up 40-50 points, okay? And so on those days, with a system like the one I'm about to show you, you're going to get a lot of stocks triggering long, okay? And if you jump in and throw 10 trades on that day, and then the next day you have a reversal day, okay, you're gonna be in a big hole right off the bat, okay? So that's why it's better to spread out your trades, and and that way you won't get caught in those kind of situations, okay? A couple other rules or goals that we strive for is to try to capture the middle 60% of the move, okay? We don't worry about the initial 20 or the last 20. In other words, we want to trade with the trend, okay? We want to put the odds in our favor and trade with the trend. And so we're willing to give up that initial part of the move to confirm that the trend is firmly in place, okay? And then as far as the top and the last 20% or so, we don't have a crystal ball. We can't know where the exact top is going to be. If anyone tells you that, they're just completely lying to you. So really, when you're trading, you want to focus on that middle 60%, okay? Trust me, you will never go broke taking profits. If you focus on that consistently, you will make a lot of money in this business, okay? And it's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong, okay? So earlier I mentioned that I was going to show you a quick way to remove at least 50% of your risk during volatile markets, okay? So in trending markets are very predictable, as I said, okay? And that's what you want to be trading in. Now, volatile markets have big swings back and forth, okay? They're very unpredictable. So the one way to not necessarily get caught up in that is to trade low beta stocks. In other words, most people need to worry about the major indices. Okay, if you're trading the U.S. markets, you want to look at the Dow Jones, the S&P, and the Nasdaq 100. Okay, because if they are trending strongly up, okay, if it's in a bullish trend, and you're shorting a stock, you know, you may have the right setup, but because the markets are so strong moving up as a whole, they're pulling that stock with it, and you're counter trend trading, which is goes completely against what I'm about to show you. Okay. Now, for any of you who are not familiar with beta, let me just quickly explain it. It's a measure of the volatility or systematic risk of a security or portfolio in comparison to the market as a whole. So in other words, if you have a stock that has a beta of 1, it means it's correlated with the market. It moves along with the market. If it's less than 1, it kind of does its own thing. Okay, so even though those indices are moving strongly in one direction, it can buck the trend and go the opposite way because it sort of does its own thing. A beta greater than 1 means that security is even more volatile in that market. And you're going during volatile times, you're going to really see some wild swings back and forth. Okay, so if you in times of high volatility, if you focus on securities or markets that have a low beta, okay, the lower the better, you'll do very well following the rules of your system. Okay, now let's get into the strategy itself. Okay? So indicators are supposed to provide clarity. Okay, now when we started developing this strategy years ago, many years ago, okay, we started plotting indicators on our chart to provide clarity. But we kept adding indicators and adding indicators because we wanted to come up with the so-called holy grail. We were looking for the perfect setup. And we ended up with way too many indicators on our chart. It looked like this painting, a complete mess, okay? So these are the indicators that we originally had plotted for the strategy on here. And what we found was that over time, we became less and less active because trying to find a stock or a market that would have all of these indicators line up perfectly at the same time was very difficult. So although our accuracy level was very high, our activity level started dropping, okay? So we started looking at ways to become more active, and we started peeling off indicators one by one, okay? And what we've ended up with are basically three simple indicators: 2 simple moving averages and the Chaikin money flow indicator, okay? Now, the key to this strategy is the specific settings that we've come up with, okay? That's really the secret sauce to this, and I'll go through that in a little while. Now, for those of you who aren't familiar with it, simple moving averages are calculated by adding the closing price of the security for a number of time periods and then dividing this total by the number of time periods, just a basic average. Now, over the years, we have used this with exponential moving averages as well as weighted moving averages. But what we found was that they were unnecessary. The simple moving averages work just as well. And actually, with a couple of the exit strategies we use, it allows us to stay in the trade a little longer, which is why we no longer look at anything other than the simple moving averages. Okay? The Chaikin money flow indicator measures the amount of money flow volume over a specific period. Now, most of the charting platforms out there have the default setting for Chaikin money flow at 20 or 21 periods. I have also seen it with 14 on several platforms. We use something different. Again, over the years, we've refined it and come up with a setting that we find consistently reliable. And I'll get to that in a little while. Now, as far as what you need to trade this system, these 3 indicators are available on just about any trading platform or charting platform, excuse me. So you don't need any sophisticated, expensive charting platform. Any of the basic free ones available out there are just as fine, as well as Thinkorswim, TradeStation, eSignal, any of those. Okay, so there's no need to spend more money on new charting software or hardware for that matter. Okay, if you're viewing this webinar, you have all the equipment you need. There is no need to spend anything additional to trade this. Okay, just a few of the benefits before I get to the actual strategy is number one, it works on any market: stock, options, futures, forex, and globally, on any time frame and any price level. You can trade a penny stock, or you can trade the monster stocks like the Googles and Amazons of the world. Okay, any trader with any level of experience can use this. I'm going to show you how simple it is to spot on a chart and follow the rules. So even if you're just beginning, this will be very suitable for you. It can be traded on a part-time basis or a full-time basis. So some of you, have very limited time to devote to your trading. If you have a full-time job and a family, etc., it can be very difficult to find the time to search through charts and find trades. So in that case, you might want to consider trading on weekly charts. That way, you only have to do your work once a week. It can be done on weekends, and it's just a matter of reviewing your open positions and flipping through a few charts to find some trades for the upcoming week. If you intend on making a living off this, or can afford to be in front of your screen all day, Then again, daily charts work very, very well, but intraday charts, the 5-minute, 15-minute, hourly work just as well. Okay. Now, one of the best benefits of this system is that it grows your account consistently. Okay. So even if you're starting off with a smaller account, this is a great way to incrementally grow your account consistently. Okay, and I'm going to show you some performance on the next couple of slides to help you understand how consistent this really is. Now, it can also really do well with option strategies. We have a number of option traders on here now, and the beauty of that is you can use options to really leverage this and turn a small amount into a much larger amount. For any of you who aren't option traders, it will work just as well with going long or short stocks, but you may want to look into options because it can really leverage it, and you don't need any advanced type of option strategies, spreads, butterflies, straddles, triangles, for example. Just the long calls and puts are fine. Now, let me show you some performance that we have achieved with this over the last little while. Okay. Now, what I want you to notice here is that, number one, it takes long and short trades. It really doesn't matter. Okay. The price levels of stocks you'll see, here's a $3 stock. Here's Google before the split at 1,000. So it really doesn't matter. Okay. This, by the way, is sorted by closing date, and what you're going to notice is a pattern that has been consistent over years. Okay, more winners than losers, and the key here is the losses are kept to a minimum. Okay, with the exit strategies that we use, the losses are always kept to a minimum. Now, this particular slide here was during a period of higher volatility, a lot of back and forth with the overall indices. Okay, so you do have times where you get a few losing trades in a row. Okay, but I'm going to show you on the next slide a time period where it was more of a strong trending period. Okay, before I get to that, just one other thing to note: the days in trade, they're going to vary. You get sometimes 1 day, 2 day, etc., and then others 35 days. On average, if you're working with daily charts, okay, you're looking at an average hold of between a week and a half to 2 weeks. Okay. Now, here on this page, this is going a little further back, and this is a perfect example of what I meant by helping you grow your account consistently and turning a smaller account into a larger account. Okay. Here you have a time period where the markets were really trending strongly. And out of about, I believe it's 30 trades on this page, you have 28 winners, okay, and only two small losses. And one of them was for a 7-cent loss. Okay, so every year you have 3 or 4 periods throughout the year where you will get everything trending perfectly together this way, and this is what really we live for with this system. Is the periods of higher volatility will still make you money, but these time periods where the markets are trending strongly is really where you see your account grow exponentially. Okay, so let's get into some examples here, and let me detail the actual strategy for you. So as we're going to go through these charts, I want you to notice a few things. I'm going to show you different markets. Okay, in this case we have Twitter, okay, and different price levels. Okay, at this point in time Twitter was a $40-some-odd stock. Now they're all going to be based on daily charts. Okay, but again, they work on any time frame. So what you have is a shorter term moving average here in yellow and a longer term moving average in light blue. Okay, and then at the bottom here you have your CMF, your check and money flow. And what you need to focus on for the check and money flow is the white line down the middle there, the 0 line. Okay, that's what all you need to focus on for the check and money flow. Now, the setup for a bullish trade, a long trade, you want the shorter term moving average to break above the longer term. And by the way, this isn't a simple moving average crossover system. There's more to it than that. It may appear like that from the beginning here, but there is more to it. Let me just give you a couple of examples. So the shorter term moving average in yellow moves above the longer term in blue. The price bars must be above both moving averages as they were right here, okay? And in this case, for a long trade, you need the check and money flow to be above 0, okay, to be positive. And that's your entry there, okay? When you enter the trade, you want your initial stop loss to go just below the previous pivot low, which is right here, okay? So you entered the trade in this case, it was around the $41 mark, okay? It was a nice move up, and we exited right around the $55 mark. So a real nice profit inside of a month, okay, about 3 weeks time, so which was a great trade. And what you're going to notice about a number of these examples is that rarely do you see a pullback after entering a trade with the system. It generally moves in your direction immediately, which allows you to remain calm and think rationally and manage that trade as it moves in your direction, okay? So that was a long example. Let me show you the short one. It's similar, I should say it's exactly the same except in the opposite direction. So here you have the shorter term moving average in yellow moving below the longer term in blue. The price bars being below both moving averages. And the check and money flow being below 0, okay? That's what you want, okay? And there you go. Now, as far as the exit strategies, there's 5 different ones we use, but one main one, but I'll get to that a little later. Okay, now before I move on to the next chart, can anyone tell me what's the most important thing that you see on this chart? There's a reason why I use this as an example, okay? Can anyone spot it? Okay, we have a few different answers, but really none of you that have caught it. Here it is. I'm going to put a circle around it. You see this area here? This is that choppy mess back and forth. If you were to remove all indicators off this chart, okay, it would not be a nice trending chart. It's that choppy mess. The reason why I put it out here is to show you that during the choppy, messy periods, it avoids, it keeps us out of the market. Okay, that's the real benefit of this system. During strong trends such as here, okay, and here, it gives us trades, but during the choppy mess, it does not. Okay, let me show you quickly a few more examples. Okay, here's Facebook. The reason I put Facebook up here is just to show you that there are some stocks that are a lot more active than others. So on some, you're going to find that you get 1, maybe 2 triggers a year with this system. Others, you get them constantly, such as Facebook. Okay, so and this particular trade in here, the short entry, this is, if you're a conservative trader, excuse me, if you're a conservative trader, you might not have wanted to take this trade because the trend overall is up. It's a bullish trend on this stock. So this would be considered a counter trend trade. Okay, and I'm going to show you another example where you would have taken a loss on such a trade. Okay, and let's just quickly run through a few more here. IVAC again, wanted to just point out here the messy, choppy, sideways consolidation periods. It keeps you out of trades. Okay, I'm just going to run through these quickly. We're running a little short on time. Okay, here's Tesla, another very active stock. Okay, now, if you look at this trade here, this entry right in this area here, okay, you notice it made a nice, strong move up. Okay, but in 2 days, when you're trading a monster stock like Tesla, it can quickly retrace on you, such as this. Okay, in 2 days, it completely gave back everything. Now, in this case, this would have been a scratch trade or a small loss, okay? But we have an exit strategy that would have gotten you out of here a little sooner and locked in those profits, okay? I'll talk a bit more about that in a little while here. So Starbucks, again, another very active trade, and here's the example of this area right in here of that counter trend trade that did not work out and gave us a loss, okay? Remember, not all the trades are going to be winners, okay? But the key is to have more winners than losers. Here's Goldman Sachs, okay? Again, very ugly, messy chart if you take off the indicators. But just to show you, during the strong trending periods, it gives you a nice trade. And during the choppy sideways action, it keeps you out of the market, okay? A few more quickly. Here's Merck, same thing. This whole, oops, I'm sorry. There we go. This first half of the chart was all sideways consolidation, kept you out completely. When it started to trend strongly, it got you in, okay? Now, FXY is the ETF for Japanese yen. This chart tends to, this market tends to fluctuate back and forth with a lot of gaps. So again, very, very messy, not necessarily the best ETF to trade. But again, if you look at the choppy sideways action, kept us out. During the strong trend, we were in, okay? Here's gold. Nice, very nice trades on gold. Here's this first one here that retraced fairly quickly, and we took a small loss on, but quickly made that up with the next couple of trades. Okay, USO is the ETF for crude oil, and here we had a real nice short trade again on kind of a messy chart. Okay, now we don't have a lot of time, so let's get into the live trade review. If you have a symbol you would want me to look at, please type it into the chat box. I'm just going to take a quick second here to bring up my live charting platform. Okay, and here we go. Hope you can see that. And I will. Okay, so here we go. We have Rosa is looking for EMES. Okay. Okay, so now here's a nice example. Thanks, Rosa, for this example of a nice, strong, trending stock. This is what you want to see, okay? And let me point out the most recent trade here, which would have been in this area here. So when you get the small moving average moving above the longer term, the yellow moving above the blue, you see here, it doesn't have to necessarily be below and then turning back above it. It doesn't have to be crossing over, but if they're touching it, they come together and then separate with the yellow above the blue and the price bars above both. You see that right in here? And the checking money flow was positive. That's what you want. That's your trigger. And you see how it quickly moves in your favor, okay? And then you can manage this on the way up. Now, there is no current trigger on this. So you would have to wait for a retracement. You'd have to wait for the shorter term moving average to pull back to or below the longer term and then move back above for another longer trade, okay? But thank you for that. Let's have a look at a few more. Let's see, we have, John wanted to look at the Qs. Okay, so several great trade examples here. Going back, if we look to the far left of the chart, there was one in this area here. Actually, let me just grab my pen quickly. Hopefully you can see it better. There's one area in here, There's one in here, as you notice, the shaking money flow going positive there. Okay, one back in here. So there were several trades. Again, the real key here is that this is a nice, strong, trendy move up, not like those real messy charts. As of right now, again, had you gone into this trade back in this area here, you'd still be in this trade, okay? But it's far too extended right now to get in. You'd have to wait for a pullback again, okay? Let's look for a few others. Okay. Paul is looking for IBB. Let's have a look at IBB. The biotechnology iShares. Well, here's a nice one. Now, just a couple days too late, Paul. If you look at it, right in here, 2 days ago, would have been your entry. It's perfect. Just on this bar here, which was May 22nd, you see the yellow moving above the blue. There's your breakout on positive CMF, and again, quickly in 2 days, a very nice move there. So unfortunately, you'd have to wait for another pullback here. Getting in now, you know, if you're a very aggressive trader, you can do so. You're just taking more risk because, again, your stop loss would be at the bottom of the most recent pivot low down here. So getting in a couple days later, you're just expanding that area of risk. So again, well, you can wait for a pullback and going from there. Let's see, do we have time for a few more? Simon is asking for GPS. Thanks, Simon. Let's have a look. Okay, now, I'm glad you brought this up. Now, if you look at this chart overall, think of if you remove the indicators, okay? Let me see if I can do that for you quickly here. There we go. Now, there's another example of that choppy, messy chart, okay? So it's really difficult, and especially when you see a lot of gaps like that. So that is not a chart I would recommend trading to begin with. But there were areas where this took some real nice trades. But one point I want to make out here is in this most recent area, right in here, let me get my pen quickly, right in this bar here, okay? You see it actually triggered on a gap, okay? I don't like taking those. I would suggest you don't enter on gaps, okay? Because again, it's already immediately run away, and the area from your entry point to the low of your most recent low here is quite large. So you're taking on a lot more risk that way, okay? But or else, that would have been the entry here. And again, think of it this way. I mentioned about the others that it generally tends to move in your direction immediately after you enter. Well, when you enter on a gap like this, you're entering at the high end, so it retraced and came right back down. It actually went against you before it started moving for you, okay? So let's have a look at a couple more, and then we'll actually, okay, I'm being told just one more. We're running out of time here. Let's see. Jay wants to look at Tesla, so let's have a look at Tesla. Okay, actually, this is one, thank you, Jay, one that you can put on your watch list and keep an eye on. This, as we've seen on the historical trade examples, gives some beautiful trades. When this stock gains momentum, it really moves. Now, it's moved, the price bars have moved above both moving averages, but the yellow is not above the blue yet. So what we really need here is for Tesla to pull back and retest these averages before turning around. At that point is when you'll get your trigger. Your CMF is already positive, but I would put this on a watch list and keep an eye on it for that move. A couple more that I had noticed before coming on for this presentation that look like they're almost ready to go are here. DD, here you go. The price bars have moved above. All you need is the day where the yellow shows itself above the blue here, and the Chaikin money flow, which is right around the zero mark right now, turns positive. So you may want to put that on your watch list. A couple of others, ETFs that I want to show you. The financial sector is in the same sort of situation. The CMF has already turned positive. Price bars are above. We're just waiting for that yellow line to move above here. So really, this one with today's action is a little more extended. You may want to wait for a pullback. The other one is that I had noticed was XLE, similar situation. Generally, the reason why I want to show you this, when you get a strong push up like this, and then you get a sideways consolidation, it's like a coil ready to wind up and then explode. So you should see a strong move one way or the other, and most likely it will be to the upside because of this trend here. So if you keep an eye on this, you may get an entry to the long side here soon. Okay. Let me just wrap this up quickly. Hopefully we'll have time for a few questions. So I'm just going to bring up my presentation again. Here we go. So those are the three you want to note to keep an eye on for this week. Okay. Now today I've shown you a number of things. I've given you some basics to use regardless of the system you're using. The 6 questions to ask yourself before every trade. A quick step you can take to eliminate half your risk in volatile markets, okay? And I've given you a brief overview of this strategy. Now, as far as all the intricacies of it, the exact settings of the indicators, etc., we hold a live class where we provide you with all that information along with dozens and dozens of trade examples. So the class we hold for the 3 simple steps to profit, what we do for you is we give you a detailed chart setup. We help you set up your chart from the beginning with no indicators. We load them on there and help you save it as a default so you can use, you're always sure you have the exact settings you need going forward. Okay, we will show you exactly how to use those indicators. There is an exact formation we're looking for in each indicator, okay? And we'll show you another simple, very quick trick to identify trending markets, okay, and stay out of the sideways markets. Okay, there is another very simple thing you could look at that will immediately tell you when that trend is about to take place. We go through dozens of actual trade examples, okay, both historical and live, and really our whole goal for this 2-hour class is to actually do a live scan together. The last hour of the class, we actually do a live scan together, lining up trades for the coming week, okay, so that you can walk away, place those trades, and make money immediately, okay? Now, our next class is coming up this Saturday, actually, May 31st, from 1 p.m. to 3 p.m. Eastern. Okay, the event will be recorded, so if you can't attend that day, you can still, you'll have the recording. We'll send that out to you as soon as the event ends. And we normally sell this class for $297, but for anyone attending this webinar today, we're offering a low price of $97. Okay, all you have to do is go to tradingwins.com/simple to sign up. Okay. Again, the focus here is not only to teach you the exact strategy step by step, but to do a full search with you and find you trades that you can walk away with the coming week and more than make up that $97 for you. Okay. We're not interested in selling you a system that you're not going to be able to use, is going to be useless, okay? We want to provide you not only with a system, but with education that regardless of the system and strategy that you plan to use, you can really benefit from. And again, it will be recorded. And I actually, if you're going to attend the class, I encourage you to watch that recording at least twice over the 2-week period following the event, okay, to really make sure you don't miss anything and that you really understand the trade, okay. So let's, if we have a few more minutes, let's take some time and ask questions, okay? So I'll take a couple of questions if anyone has any. Okay. Now, sorry, if by chance we run out of time here, you can always go to our site, tradingwinds.com. We have a live chat feature. Our staff is here. They're going to stick around tonight. They'll be more than happy to answer all your questions, okay? Someone's asking about options. Again, yes. If you came in partway through the presentation, this works extremely well with options. Again, it actually helps you leverage this strategy and turn a very small amount into a much bigger amount. Someone's asking about intraday trading. Again, it works just as well on any time frame. We do trade on daily charts. Yes, we are swing traders, but we have tested this both back tested and forward testing. And by forward testing, I mean with live trades in an intraday setting. It works very well. If you trade hourly charts especially, you'll do extremely well with this, okay? Someone else is asking what exactly is included in the 2-hour class. Again, we will cover more basics of technical analysis. I'm going to show you a number of tricks that I've used over the years to really help me become a better trader. This will not only help you gain confidence in yourself, but in the system itself. And then I will get into the actual strategy. We'll spend about half hour covering the strategy, the exact formation of the 3 indicators we look for, the exact settings. Will help you set up your chart so you can save it as a default and use it. And then again, that last hour we're going to spend going through the market action of the previous day, the Friday's action, and with live charts, actually do a scan so that we can all walk away with trades to put on the following week, okay? Now, it is a 2-hour class. It's scheduled for 2 hours. It does go over that, and we're more than happy to stick around as long as we have to answer all your questions. A number of our previous class attendees have said that one of the thing they found most valuable actually was the Q&A portion of that 2-hour class, because with so many people there from different backgrounds who trade different markets on different time frames, they come up with different questions, and on things that you wouldn't otherwise think about on your own. So we end up covering a lot of different aspects of trading, and we'll stick around as long as we have to answer all those questions. And again, you'll have that recording. So even if Vince. You can't stay beyond 3, you'll have the recording. Okay, thank you very much.